Welcome to another edition of Fridays with Fred. My name is Fred Said. I got a call earlier from a seller of mine that's going to list and sell their home with us, and he asked me, Fred, do I have to pay capital gains or income taxes on whatever my equity is? And this is the answer that I have for you. For him, it was a little bit different, but for you, it depends on what type of property you own. Option one, if you own an investment property, you're always going to have the liability of paying income tax or capital gain on whatever the equity might be, because it's an investment property. No matter if you own it for 6 months or 10 years, you're going to pay capital gains. Now, whether or not you'll pay it, how much you owe on it, that depends on the equity, whatever the net equity is, meaning after commissions that you pay for agents to sell the property, closing costs, repairs, depreciation of value, whatever it might be, your CPA accountant knows, and they'll tell you what taxes you actually have to pay on that net equity. But you are subject to and liable to capital gains on any investment property in California, no matter how long you've owned the home. So remember that. Number two, if it's your principal residence and you own it and you live in there, this is the breakdown for that. If you've owned the principal residence for less than 2 years and you sell it within 2 years of owning it, for example, you just bought it a year ago and you're selling it today and you close tomorrow, whatever it might be, you will also be subject to capital gains. And what that amount will be is it dependent on all the factors I talked about before in regards to what your equity is, what your cost is, acquisition, closing cost, etc. And that's for your CPA and accountant to figure out. Now, the second aspect of selling your principal residence and having to pay taxes or not on the equity is the following. If you own the property for more than 2 years, this is the cool part. In California, as long as you're a single individual or married, it's broken up into those categories. If you're single, you're allowed up to $250,000 of tax-free equity. So if you've only made $150,000 in equity of 4 years of owning it, you don't pay a dime in income tax or capital gain. But if you break that $250,000 mark as a single individual, you will be subject to capital gains of whatever that amount is above $250,000. If you're married in California, you're allowed up to $500,000 in tax-free equity. And anything beyond that as well, you're subject to capital gain. So either way, consult and talk to your CPA or your accountant in regards to, would I owe anything? Do I owe anything prior to selling? And that's some of the vendors that we have access to that we give our sellers if they have any questions. But if you have a question about your property in general, contact me 7 days a week at 949-272-0125. For any questions regarding this topic, videos, look at properties, look at our highly reviewed website at www.bestocproperties.com, and tune in next week for another amazing edition of Fridays with Fred. Why? Because that's what Fred said.